use a gimbal tool and it's incomprehensible like most tools. Anyway, let's talk to you about it. So we are back from tour. It is the Epilogue. We're back at base. Bikes in the background there. I'll show you in a minute. So what am I going to talk to you about today? Let's get straight on to what we're going to talk to you about. So number one, I'm going to talk to you about inflation and why the truth of the matter is the inflation is the debt game end game. That's where we're at. Inflation is the debt game end game, and we are absolutely, let me make this a bit higher actually. Lift it up. We're in the debt end game on the inflation side. It's something I've been saying a bit, but I think I need to reiterate quite a lot, is that in actual fact, when you have inflation in the manner that we have, by the way, hit the like so that we can bring people in on you. When you have inflation in the way that we have, yeah, raining cold in London there. Oh dear, wait for the grid downs, my good friend. Sorry about that. Hot and warm, balmy here. Indeed, cleaning out all the bike kit and post-trip travails. So listen, when you have inflation at the levels that we do, one of the key things that happens is that you cannot kill inflation with rates that are lower than the inflation rate. As I've said this a few times, but maybe not enough and not clarified it. So I'm going to properly clarify it. And what prompted me to clarify that, I try to remember every company I've ever signed up to and contact them to delete me off their database, as he says. Looks amazing there, France. Yes, we're lucky, we're balmy and warm. I'll show you a little bit more. Good morning to you, Carthajo. Yeah, welcome. Please hit us a like and the shares. So it was our good friend, the hedge fund manager who was with George Soros, waiting for his name, it'll come back to me now, who once again mentioned this. And what he said that prompted me to, yes, I've said that before, but I haven't clarified that sufficiently. I haven't said it enough times. I haven't made it absolutely patently clear. And what he said was, every time the US market has got over 5% inflation, there has never been an event. Listen to this. It's very important that you get this, because I haven't been as clear and as explicit on this point as when I watched him and I said I need to be more clear here. There has never been a point in economic history that inflation rates were brought back down without utilizing interest rates a whole bunch higher than the inflation rate. Now, it should sound obvious. And as I said, I've mentioned it before in passing, but I've not made this clear enough. You don't catch, and we've been on a bike tour. So let me give you a bike analogy. I'm hurtling along on an American bike, a Harley, and I'm doing, let's say, 86 miles an hour, as in 8.6% inflation. And you're behind me on tour, and you're following me, and you say, I'm going to put that man in his place. I'm going to take him down. I'm going to go fast. I'm going to bring him back. I'm going to beat him and get him down. I'm going to beat him. Let me set my moped here at 35 miles an hour. And that way I'm going to catch Francis, who's already way ahead of me. He's gone out in the game, burning rubber, hitting it, 86 miles an hour on the Route 66. And you're chasing me late, as the Fed was late. They were horribly late. You're chasing me on your Vespa after I've departed, and you've decided 35 miles an hour, which is the current, in fact, 32 miles an hour, 32 and a half miles an hour. That is the 3.25. Stanley Druckenmiller was the name I wasn't getting. Thank you for the reminder in the comments. So you are chasing me on your Vespa at 32 miles an hour and a half. Let's give you 33, your little Masonic number. You're chasing me at 33, which is where the current interest rates for the Fed is. Don't even talk about the UK just yet. I'll come to that later. I am inflation. I've stolen a base on you. I'm quick as shit, and I'm hitting it at 86 miles an hour, and I left before you. Are you containing me, catching me, or losing further ground? Even though you're now doing 33 miles an hour. Well, guess what's happening? That distance on your GPS cam is getting bigger and bigger. Francis is pulling away. He's leaving you in the dust, Mr. Fed. He is hot like inflation is hot. and he's going fast, fast, fast down the road. So in the Volcker years, which is a big, big moment, the only way he contained inflation is he put rates not just a little above, but substantially above what was the measured inflation. Gregory in Shanghai, welcome. Harley Baseman, says somebody. So running a different race. The Fed is on the Vespa. Yes, says Harshad, he likes that. The Vespa is chasing the Harley. I should be on a BMW S1000R Super Sport with all the light pack, because that's how fast I'm going. And 8.6% inflation, I'm doing 86 miles an hour. Now, not only do you have to go higher in the same speed as me, you actually have to go higher than the speed of me, and only then do you start catching me. So if he jumps off his Vespa and he jumps on to Valentino Rossi's factory racing Ducati or Yamaha or whatever it is he's on, and instead of doing 86 miles an hour, he starts doing 100 miles an hour, guess what? There's still inflation. Inflation is the distance between him and me. And at the moment, in terms of interest rates, that distance is currently getting bigger and bigger and bigger, because the Vespa is actually losing ground. It's getting bigger and bigger and bigger, and my hands are getting wider and wider. He stops, jumps off the Vespa, jumps onto Valentino Rossi, starts doing 180 miles an hour, which would be the equivalent of 18%. And I'm doing 8.6 in the US. We'll come to the UK in a minute. I'm doing 86 miles an hour. I've started a day and a half before him. I've been going faster than him for a long, long time. That distance is now huge. So just because he's doing 180 miles an hour and has the road to do it, it's going to take him ages to even close this huge big gap. And he only starts to beat inflation after he's passed me, and we have a true positive differential. At the moment, you have negative real rates. That Vespa ain't catching the Harley at all. Even though it's a heavy old bike, it's a new Harley, but it's a heavy bike, it's still doing 86 miles an hour. And that's 8.6% inflation. Shout out from North Carolina for your resourceful insights. Confirms my thoughts. Get out of fiat and into silver and gold and crypto in your physical possession. Vespa needs nitro to catch up. It needs more than that. It needs a miracle. It needs a new bike. So the whole conception is, once you've got ahead and you've reintroduced a beneficial positive yield, does debt start to get supported again? So the debt markets are in collapse. The relationship between interest rates, inflation, and debt markets, people need to understand that. As long as you are giving a compounding negative, as in the UK example, which I did recently with Paul Greenery on his channel, and I've said numerous times again, the UK is at 2.25. So he's got an even slower Vespa. He's got a Vespa. The Bailey of the Bank of England's got a Vespa with a flat back wheel. And he's managing 22 miles, and he's in top gear, and he's gassing it, and his head's down like this, and it's whining like a little meow. And I am off. I'm off 3 days before him. I'm going a whole bunch quicker than him. He's never closing that gap. It is continuing to extend, and that differential is the compounded difference between the inflation rate in the UK at 10.1%. So I'm doing 101 miles an hour, 160 Ks. This Bailey brat, part of the Eton cult of central bankers, is telling you it's all Kwasi Kwarteng's fault. And he's doing 22 and a half miles an hour on a Vespa with a flat wheel in top gear, fully maxed out. He ain't catching me, and he's showing no sign of a pit stop for a new bike. That differential is extending. The UK debt market is collapsing in value, and when the debt market collapses in value, the implied interest rates on those things have to go much, much higher, what they are currently needing to yield, because to buy them, they cost a whole bunch less, but the contract that it gives as interest, it is a contract, so you release $1 billion, and it will pay 10 million a year or whatever the case may be. Now, if you buy it for 400, it's still giving you 10 million a year. So the yield is going up. That is pushing the interest rates. No one buys new debt when you can buy already devalued debt that is paying in a fixed yield. That is going to be actually doubling your yield. If it's half the price to buy, it's actually doubling your yield on return. So what's happening is they are in a chronic negative yield. You are compounding. If you were to buy new release debt, you are compounding the differential of minus 7.75 roughly on a 2.25 versus that. So it is an absolute loser, and nobody wants to do it. That's why there's no bid. That's why the Bank of England is the big bid. And this is what's happening in Japan and all the other places. You will never curtail inflation. The monkey on the Harley that got away a day and a half early before the race started, you ain't catching him unless you're going faster than him. And even when you're going faster than him, it's going to take you quite some time to catch him, because he set off earlier. He was going faster than you for an extended period. You took a long, slow period of, people forget, the first Fed increase was 0.25. I was sitting expecting Bitcoin to collapse and gold to actually sell off, and they laughed. They did 0.25. Bitcoin had a pump up, and this was at the 30K level when we were saying, no, it's going to go short. Bitcoin had a pump up, and gold actually went up, broke to the upside. Now they're all much lower, because suddenly they go, we were going to run after the monkey, and I was going to run like this, like an old man with a stick. Catch that monkey. Oh, catch the monkey. Someone catch the monkey. And the monkey's like, look at that old twit with a stick. He ain't going nowhere fast. Then they decided, okay, we need to run. So that's 0.75. But now you're still only running at a slower speed than the monkey who's got away on the Harley. So you just ain't catching him until you start going a quicker speed. Then you stop making the negative real rates an ever expanding, growing problem. You stop it from growing any bigger. That doesn't mean you've caught it back. You now have to hold it there faster than him for an extended period because you were bloody late. That's what happened during the Volcker years. And you had to hold it. Pain, tears, crying, everything. So you can't chase a Ferrari or a Porsche Turbo in a golf cart. You can't do it. You need to change vehicles. And you can't chase him when you're as late as they were. I told them inflation. They never listened to me. Funny that. We were right, as were many others. We told them this is hyperinflationary, assets inflation. It comes first, then the other inflation. They started giving stimulus checks to everyday people. Guess what? Your second-hand car boomer market. You had a boom in a depreciating asset like second-hand cars, where the technology is being renewed and refreshed. This has always been a depreciating asset class for dealers. Dealers know you've got to move things fast because your stock is dying on you. The minute you buy it, it starts dying on you. It's a depreciating asset. It's not even property. It's not gold. It's a fully depreciating asset. But you had a bubble in depreciating asset. Why? Because you had so much money chasing so many things. People started buying old Ford F-150s, and the prices were pumping and everything. So the Fed is a monkey in a golf cart, says Norway, and he's absolutely right. And that is the analogy. So step number one, if you're in America and you accept the official government stats is around 8% inflation, your interest rates, just to bring it back down, has to be a number greater than sign than the 8%. In other words, and to do it meaningfully and quickly, I mean, 8.1 or 8.5 ain't going to cut it, because you're just going to be chasing him in your turbocharged golf cart, only marginally catching him up, and he's like 100 kilometers in a day's ride ahead of you. So you're going to be chasing like that for a very long time, reeling him in slowly. So realistically, to bring this to an end, you need 9 or more. And 1% differential isn't going to be huge. And don't forget, that's off government stats, which are a fraudulent shrinkflation lie. So here we are. We're all sitting here saying, no, they're going to curb inflation. They're going to curb inflation. So when you carry that over to the British scenario, the British rates are going to have to super spike. And what does that mean for the debt? They are going to collapse. What does that mean for liquidity? Well, no one else is going to be a buyer but the Bank of England. But if the Bank of England knows that, they're going to have to buy, but in a retreating way. They're not going to throw all their money and hold it up at this value. They say there's no one else going to buy this. This thing's got to go down. We just got to let it happen slightly less disorderly. But actually, such is the realization that the debt markets are over. It's a case of, okay, we won't fall off a cliff. We'll go down a 60-degree incline instead. And then if you've been on a motorcycle and gone down a 60-degree incline, you know you're very, very afraid of going arse over tits, front over bars, and having your own motorbike ride you on the way down. Smashity, smash, smash, smash. So it's not much better than going down a cliff. Hit the likes. Appreciate the perspective. Thanks, Lee, for telling the guys and getting them involved. Well, the Ferrari won't pit stop. The Ferrari won't pit stop because it's on negative yield fuel. It's got a battery cell, it's got a regenerative engine, it's got a petrol engine, it's got all of this juice because it's got oil behind it. And in this case, instead of oil being something that it's depleting and it's moving, it's the driver of inflation. It's a driver of inflation. Plus, you go have a war with Russia and you bifurcate the supply chain. That's a further driver of education. So it's got solar panels, the sun's coming out, it's just getting more and more power added to it all the way along because the policies being pursued by the government of the day are destructive to the supply chain, are supportive for further inflation, and will ensure that you go into a debt reset. What would happen if we set the US rates at 9%? Don't forget, in the UK, that's probably going to need to be 12 or 13% because A, they've got a currency crisis. People are moving money out of the UK. You've got to make it more attractive so they don't want to stay in dollars to come back into pounds, likewise into yen. God knows. Now the yen, wow. I mean, there's just degrees. There's just degrees of garbage in this. There's the stinkiest, turdy variety. Then there's foul. Then there's chemically toxic, but they're all garbage. And this is where you are at. So if we up now, tomorrow, and said, listen, guys, there's no point chasing a Ferrari or a Harley doing 86 miles an hour in a golf cart or a Vespa. We go straight to the Bugatti Veyron and we just hit the hyperforce and we just smash this thing and we bring to bear 1400 bhp and we're on the superhighway and we could even do it and we go straight to 9%. Boom, 9% rate. What happens to TLT when you go to 9% to win the game against inflation? And this is why people haven't understood why the Fed is so hawkish all the time, because they know they can't win against inflation unless they're going faster on than it in terms of the rate hikes. They need a positive real carry. So let's just explain the CPI. The C is your inflation rate. Your interest rate, which is the central bank rate, is here. You've got to subtract the two. If you have a negative carry, there's no way in hell you're killing inflation. Inflation is not only remaining, it is also a compounding force. So the longer you leave it, the more it compounds. And with that, you train people's behavior. So here I am. I'd like a Defender Land Rover, and I'd like to get a couple of nice things. I'll go buy them now, before the steel, the lithium, the everything else is compounding in 2 years' time. Those components to get and to source and to make in the car and the manufacturing and the wage increases and the power and the energy and the coal, the diesel, the everything else, you get it now. So you change habitual behavior by people in terms of how they are going to behave. So we go from a saving place to bring all future possible needs forward and do it now, because it's going to be 2.5x. The cash that you're getting is worthless. So you go hassle your boss for an increase and say, I can't get by, and you go binge buy anything you may need on the basis it's going to be too flippin' expensive in the future. So you're bringing demand forward, and you're further adding fuel to the inflation situation because you've got a stupid central bank that's chasing a Ferrari with a monkey behind the wheel and a golf cart. Can you see that? And until you take the monkey out and you put Schumacher in there, and you get him behind the wheel of a Bugatti Veyron, you're not catching the Harley. And even when you do, Varon, the Chiron, at least, let's call him. There was a Veyron, and now it's a Chiron. So I'm getting my vowels all cocked up. You need Shuri in the Chiron, so that the Chiron. I'm making new models for these oaks before they've even made them. You get Shuri in the Chiron, and he's got to put foot, and he's got to go for a couple of days to catch the dude on the Harley or the Ferrari who's disappeared into the sunset a couple of days before. So what this does is actually, it's going to continue to shock you how hawkish the Fed is. This is what I've continued to say. Keep on keeping on. So the Fed knows that, and they're going to drive the dollar. Plus, they are weaponizing geopolitically the dollar to pass more of the inflation pain onto others. Because if they keep pushing the dollar, it will keep the oil price and the energy somewhat under pressure so that they reduce their inflation number at the cost of the pound, because everybody's chasing into the dollar. Now the British with surplus cash are moving it into American banks. The treasury departments of corporates over the world are moving into dollar. The pound continues to lose ground against the dollar. So the pound fuel cross again all happens. So you can't beat inflation with a lower interest rate than inflation. Who wants to buy debt that is over time negative compounding against you and guaranteed destroying your money? When you can have a bar of gold, stick it in the ground, it won't rust, it won't melt, and providing you don't tell anyone else where it is, it'll still be there in 1,000 years' time. Okay, so they are excessively hawkish and everyone is focused on tops. It's a typical retail, and I'm shocked by the amount of intermediate and even people that consider themselves advanced that sit there, and the game all seems to be, let's call a pivot. Let's call a pivot. The game is let's call a pivot. No, let's call a reset. This is a reset event. This is the full reset event. Because if you put rates at 9%, what happens to the banking system? What happens to the housing market? Let's just say, instead of playing this game out slowly, we just shot there right now like a fruit fly. 9%. What happens to the dollar? The dollar kills it against all the other currencies that aren't 9%. Hey, Neil, well, nice in Cape Town. Hope the weather's good. The force that want the Fed to pause are powerful. But what do you think that does? You can stop the monkey on the golf cart, but that ends up adding more days to the dude on the Harley and the Ferrari that have disappeared. This is the cannonball run. They're halfway to Vegas from New York, bud. You're losing days. You're going to lose that race, and if you lose that race, that's a collapse. Because what happens is inflation compounds on itself and it accelerates. It accelerates. It's a snowball going down the village. The only way you stop it is you've got to melt that snowball. How do you do it? You've got to be hotter than the area around it. You have to be higher and harder. Otherwise, it's going to smash you. So this is the key point, and this is why people keep underestimating how and why they have to be hawkish. They're at 3.25% on an 8.6, 8.1, I can't even remember which was the last number. They're all lies anyway. The truth is they're in double digits. And as a result, you don't win. You've got that gap. He's getting faster and he's leaving a further territory. You're not catching him up. You're never catching him up. He's getting further and further away. So that's key point number one that I wanted to talk to you about. And that's why stop calling tops. Stop calling tops. You go into a major dollar bull spike on account of hawkishness by the Fed, which is in essence a policy error. But whatever they do is a policy error. If they go, no, okay, we've done enough, we've got to worry about the recession and we're going to crash the market and all of that. No, they don't. No, they don't. They want to crash the market. They're going to talk like we've got to worry about it, but that's not what they truly mean. They want to crash the market, and BlackRock's going to buy your home off you when your interest rates spike and you can't make your mortgage payment. That's it. And then you'll become a tenant there and you'll pay. And in very soon time, you'll be paying in rent more than you were paying on the mortgage. And you'll be in a CBDC and you'll have some UBI if you're due a pension that's now bankrupt because it was treasuries, your gold standard. Treasuries. Let's just have a word on treasuries and government debt, especially when they say gilts. In Britain, they have a special word. It's gilts. It's gilts. It's golden edged. What a bunch of baloney marketing. Why do they use gold, by the way? Oh, there's another reason, something for you to think about. It's not golden edge. All it says is the government backs it and will defraud you. So when the government is saying they're back for it, they say, well, we can raise taxes. You'll always get your money. You can always get paid. No, they won't. They're going to pay you in diminished money, and they're going to inverse compound against you. As ever, as I continually warn, Their game is always inflationary and to put you on the wrong side of a compound interest equation. That's how they get to buy today and pay back in much less in later years, even though nominally they're paying you what they claim to have owed you. They've devalued it through proliferation. And what ends up every now and then, you've got to wipe the decks. You want to start afresh with a new Ponzi. And you've got the technology advancements, you've got AI, you've got robotics now on your side. You don't need as much labor. Let's trim the population. Let's tell them all to shut up. Let's put them in prison camps and smart cities. Much of the same thing. Neom is Auschwitz for today. And this is the game. So we have 331 of you and 130 likes. Hit that like button if you appreciate this. So there is no beating inflation with lower rates than inflation, because all that means is debt remains a shit investment. That means people continue to sell it. And when you have a proliferation of it all around being held by many people, they'll continue to want to get out because they're continually getting a negative carry. They're getting paid less. They're getting minus 7.75 in the UK. And it's actually higher than that, as I say, with real inflation. So that's point number one. I'll come back and I'll revisit on that. But yeah, don't the debt market probably goes to failure, and the pension fund industry with that. If you went straight to 9%, these things are highly geared. Such a move in interest rates over the space of 2 years from 0.2, 0.3 to 9%. The value in the leverage on the value, as we were getting lower and lower, the sensitivity gets much, much higher. That's what people don't realize. A change from 0.2 to 0.4, you've lost half your money on a rate. This is on the debt. So the debt is going to chronically lose value until its yield is paying more than the CPI. Then it becomes an investment again, and then any other people apart from central banks will consider buying it. But I don't think we ever get there. But you go to 9%, what do you think is going to happen to the banks? What do you think is going to happen to the housing market? So if the Fed rate was 9%, I mean, I think Americans are facing 6.5%, going almost for 7% on fixed rates now. And that's at 3.25. Add 6% to that. How many Americans are still in their homes? Add 6% to a 6 or a 7% or some point in between. How many Americans with a mortgage of 95% are covering 12%? When they jumped on the ladder, it was 3 or 4. How many? How many people would feel okay and still be head above water for a sustained period paying 4 times their current mortgage? It's not going to happen. So we go into failure. This is where the economies converge into a failure point. You fall off the left side of the cliff or you fall off the right. But there is a finger of land, and you're on that Ferrari or that 4x4, and you're storming down the end of that finger. And at some point you fall off the edge. And it tapers to a point, so there is no way that you can keep splitting it. The land is a finger. You die by inflation, or you die by debt failure. One of them comes soon, and they are both intricately inclined. You cannot continue to drive down a finger of road that tapers to a point. You are going over one of the edges, or right at the very point, in which case you go over both edges by design. And that's it. So it's reset failure, or it's continue to tighten rates, and you swash everyone out of their assets. And of course, you now have established the principle of being the buyer of last resort. We'll shore up the asset prices for you. We'll buy your houses, all you poor little chimpanzees that have been thrown out. We've weaponized interest rates against you. This is the economic hitman. Not only did they make foreign nations borrow in dollars so that they can control demolition the global economy by pumping the dollar and the interest rates and thereby exploding those international economies, they've given you, my fellow Americans, mortgages with discount 2-year windows and various other things. If you haven't fixed your mortgage for the full 30 years, your bond on your home, you will be shaken out. It is a weapon. And that even if you do have it fixed, they may say, we can't continue to offer this. We have to renege. Force majeure. This is exceptional circumstances. There's a war with Russia that's escalated. There will be some geopolitical event. They'll be able to get the act of God clause out, and they will renege. Just like they're going to renege on your pensions and give you something in lieu. Just like they're going to renege on your currency eventually and give you UBI. So that is the end game. You're going to drive off that point Whether you fall off the left side or the right side, your 4x4 is continually every day advancing down that finger of land that tapers to a point. And at some point, it's over. And the difference is we are much closer to this point. You can see both cliff edges when you look out of both windows. My mortgage is a 30-year fixed at 2.75. I hope they stand to it forever. I hope to be wrong. But guess what? That bank then goes under and somebody else takes over the contract and says, we no longer feel obliged to honor their contracts. They did non-commercial business for the economic period we're in. Here's what we're offering you, or you pay cash now to settle the remainder. How good are you to settle your rest of your property if your mortgage got called in? That's all I'm saying. You need to think the unthinkable, guys, because this is their game. 373 of you on here and 173 likes. We truly appreciate it. To give us a share. Yeah, so in South Africa, you get variable rates. They have what's called prime. Prime is around 9, what was I being told? 9.75. So, and they're expecting in South Africa a 0.75 next interest rate, which would take it to 10.5. So you actually have a higher, and you don't get prime if you're an average lender. You play prime plus 2, prime plus 3. So it's very, very simple. So please do another video on gold and silver. The man who keeps saying this. This is your video on gold and silver. Because I'm telling you, dead markets are devaluing. Where does that money need to run? It needs to run into something that doesn't die in a digitized contract world where contracts are going to fail, be reneged on, new owners are going to take over and they're going to enforce new terms. And you might be in a situation where you either have to pay your mortgage off in full or accept a new rate on your mortgage. And that's how they'll throw you out of your home. So don't be too smug if you have secured 2.75 for 30 years because the institution that gave it to you couldn't do it. It's like insuring with AIG, but AIG is bust. Too much counterparty risk. Another key point, counterparty risk, man, is going to be huge, including you have to think about your brokerage accounts and your, yeah. Good evening, Francis. Wouldn't all that cause a revolution? People didn't revolt on COVID. What happened in COVID? You all stayed at home and did what you were told. Some of you even put masks on. Bank, and so here's something Paul Francis is mentioning, something they're not related. Banks in South Africa can only guarantee 100K in a falling system, so that's 100,000 rand. So so they try mollycoddle you and put all those that criticize the banking system that could fail, and they say, no, we'll be fine. The banks have got our back. I think in the UK it's 80,000 pounds, it's 100,000 euros in Euroland. They don't have that money. They don't have that money. It's another contract where government has asserted for the benefit of confidence in the system that they will make whole people in such a circumstance. They will never make you whole for that amount in an event that the entire banking system fails. Because they'll have every citizen in the world, in that country, if they're a government of that country, all needing the money all at the same time. Where are they going to get it? Issue a bond? Are you going to buy bonds? No one's buying bonds. Bonds are collapsed. There's no confidence in bonds. How do they get that money? How do they get money? Their tax receipts are going to be falling like they've never fallen before. People will be out of jobs, out of work. Businesses will be bust. Pension funds will be bust. Debt funds will be bust. Interest rates will be far too high. Credit card companies will have nothing but bust clients. The business to get in is liquidations and personal insolvencies. That's your business. If you're sitting there and say, I want to start a new business, what industry do I get in? Phoenixing individuals and corporations from debt blowouts. Because it's coming. It's coming. You're going to have a wave. You need to have a nice system. You want a really sweet pipeline. You want to be able to push people through. You want all your experts. That's going to be a growth industry like you haven't seen. So you do need, the tsunami hasn't even hit yet, says source code, hodl fiat. You do need some fiat. You do need some fiat. You do need some fiat because it will still be good for money and it can't be stolen from you by a bank if you physically hold it. Ideally, if you can hold dollars, even if you're not in America, but certainly hold your euros and your pounds, your Aussie dollars, your New Zealand dollars, and if you're in South Africa, your rands, you can have bundles of 200s, and it's already, my wallet is so fat I can't fold it in half just to have $5,000 on me in rands, and that doesn't buy you that much. My brother works in a bank. He thinks they are their services, the customers. He hates, whoops. I wanted to reply to that, and now it's brought up some menu on there. Use cash as much as you can. Absolutely, that's good advice. A treasury bank, Yellen, yeah, goodness gracious. So she's part of the problem that started under Greenspan. What was the other thing I'm going to talk? So let's just change tack and we can refer back to that. So I made it back with a bike. And I want to just say the final day was actually quite hard because we decided, instead of driving on the truck and having the bikes loaded up on the trucks coming from Kimberley, we were on the Botswana-Namibia border all the way down. We would ride our BMGSs. There were 3 of us on GSs, so you can sit on a highway and you can do 160 on those, quite easy. And we thought we'd ride them back, but it was about 500, almost 600 kilos, not kilograms. I'm not that overweight. And so we set off and did that, and it was actually a lengthy ride. We went through thunderstorms, lightning, wet roads, lots of traffic and everything. And the analogy why I'm telling you about the tour and the final trip back is you always have to have your planned exit. And it was more taxing than I thought. Even the smooth GSs, after a while, the buzzing through the handlebars, through the pegs, because we've got it all adventure set up. There's no rubber on there. There's lots of spikes and everything. I was actually exhausted by the time I got back. Traffic near the end by Joburg, people being aggressive, chopping and changing lanes, can't go as fast, you know, the usual story. So what's the message? What's the analogy here? What's the bearing for telling you that story? You've got to have exits. You've got to have your return to square point. So everybody in trading and investment is all about entries and getting involved in the game. It's all about buy here, this moving average cross there, and that means it's a great entry. No one ever talks about exits. So one thing, as I noted many times, is that exits don't get spoken about. Everybody go, oh, of course it went up after that. You're making money. Or trailing stop, you know, is your exit and all of this. And the market can moon and then crash, and your trailing stop, if it's on some other system, most of your profits you don't harvest. And people don't have real exits. Getting back, the plan, I hadn't given it much thought. It was a much bigger job. What we carried, we didn't want to carry our water camel packs and all of that. We gave it to the truck to take home for us, and then you're getting hot, and then it was raining. You didn't have your raincoat. You didn't have a jacket on. The range, actually, we took a side roads so that we could go faster and not get captured by the speed police. And then there were no petrol stations when we were getting light. I was on reserve. I thought I'd have to run with a can. We don't plan exits or return to square. Square is neutral. Home base is neutral, where you're comfortable. You don't have to be doing anything. When you get in the markets, everybody is wanting to get short right now. If you're listening to me, you want to be short TLT, you want to be long the dollar yen, you want to be long the dollar Korean won, you want to be short Cardano, short Solano, as we've suggested for the crypto guys. We're in all of those, but most people are there, don't know where to take off. And in fact, if while they're sleeping, a major event occurred that dipped hard down. You saw on Friday, the Bank of Japan sold a bunch of treasuries and smashed the dollar hard and dumped a bunch of treasuries. By the way, that's very bullish long-term USD JPY. And I'll be watching Sunday evening session with view to getting back long. They might try push it again on Monday to set the tone for the week, but that is a hell of a thing. You've got to have targets. If you have a far out target there, let's say you put in 250 yen and you were long at 144, you got in recently. In our community, we had a lot of new guys. I said 144 is a good entry. You had a run up to 152, then you had the smash down right back down to 147s. I don't know the exact numbers. I've just had a glance. And you're having an interesting ride, but you're still up from your entries. You should put, even if you don't have an HVF method macro pattern, and we do for the Korean one, which is one of the reasons why it's still one of our favorites, but you should put the 250 yen target. Because let me tell you, if you've got a super spike on the dollar, the thing that happens after the super spike on the dollar is pain and crash when we go into reset and we go down. That is the big thing. Don't forget, at the same time as the dollar is being queued with an interest rate differential for a mega pump, Saudi Arabia is talking potentially about joining the BRICS. So I'm sitting in the S nation of the original round one BRICS nation. Brazil, Russia, India, China, and South Africa, the smallest of all those. And now you're talking about Iran, you're talking about Saudi. Now, Saudi is the oil well for the world. And the petrodollar has kept and maintained the need for major nation states to hold substantial dollar holdings. And as the economic hitman arranged, also got them all to borrow in dollars so that they incurred a massive foreign exchange risk. That is now the dynamite on their supporting pillars, which is part of this controlled demolition that I continue to speak about right now. So you've got to have an exit. Even if you have no real understanding, put some stuff off number, because you will have a super spike, and during that super spike, you need to get out, actually. Don't wait for the very, very highest part. And some of you will say, but we've done a lot already. Now, I'm talking about a super spike you haven't seen on the currency markets. Remember, I'm the guy who told you first. The FX markets are the new crypto markets. Again, I said this 18 months ago, probably started saying it 2 years ago. This is what's going to happen. The FX markets are the new crypto markets. And when that happens, at the same time, you probably will have made the most profit you've ever made. Your broker or the banks or the liquidity providers on those businesses are probably going to be in force majeure. So you could end up with a trade of a lifetime, and you could end up with none of the rewards. Targets and bleeding out. Once you have a very, very flush account, bleed it out, turn it into physical gold and silver. Physically held by you and controlled by you, not in a bank vault, not in anything else. This is the important part of the game that we're talking about. And too many people in investing and targeting never think, at what point do I get out? And there is so much about entries. Oh, this was a great entry, and then I entered here, and then there was a bit of volume that did this, and this, and the RSI was at an all-time low, and all of this nonsense indicator line-based thing. Targets are king. Targets, and these are days that crazy numbers can happen overnight, and you could be asleep. Remember, most of us have between 8 hours where we're physically completely asleep. And you probably have a handful of hours before that where you're not consciously in markets, and an hour to wake up, and you have your coffee, and you're probably eating a meal 1 or 2 times. You could potentially be not paying attention for 12 hours a day. If you don't have a target, you're not in the system. And if you try to chase something, once it's capitulating the other way, and that is the biggest blow off top of the dollar, and now it's a proper slap in the face on scale that no one's ever seen before, you could have missed your peak profit moment, and you won't get filled once it goes the other way. And they will probably counter a dollar spike when it starts to happen with a major BRICS announcement, which will be a death knell to the dollar as the global world currency. Like oil will now be priced in 5 different currencies, or in a basket of currencies, or which includes gold, that the BRICS have put together, that will have a ruble, a yuan, euro, or Saudi riyal or whatever. And as a result, you could have a massive blow-off and then a subsequent very big reaction. Remember, if you're trying to time markets on blow-offs, most people are addicted to the P&L profits and will sit and watch most of it wash out on the slap down. You have to remember, go look at a dot-com peak pump blow-off. Go look at Bitcoin 2017 into the 2018 January high, or 2017 December high. This is a complete surgeonomics, and then it's just wild. And try get fulfillment. You'll get bad fulfillment. Brokers will treat you badly. They'll make sure they are covered first, and they've covered their counterparty obligations before they give you a fill. They will make sure that they first got your sell sold to their liquidity provider before they will give you their enter point and take their spread. They're not going to give you a sell unless they know their liquidity provider has already honored it. Then they will confirm to you. So it's kind of like I'm in between selling you a good or an item, and I've got a manufacturer, and you my buyer, and I'm a retailer. I'll make sure I've got your money in my hand, and I've got the item provided from the guy. Then I smash you together and take my profit. I'm not going to be saying, yeah, sure, and give it to you, and then I can't source it, and then I have to pay the difference to, that the manufacturer's put his price up. You've got to have targets in. And if they're in the system, gaps can work in your favor if you're on the right side of the market. You have to plan your trip home. You have to plan your trip home, and you've got to have thought about it before. Hi from Japan. Yes, nice to see you, TK. Thank you. Great. It's great having the like count hitting 228 when there's 446 of you guys going. So have your targets in. Have your targets in. You can be aggressive with them if you have a validation. Now, we, of course, at themarketsniper.com, we trade with HVF method, and we know where our targets are, and they're geometrically produced, and we have proven outperformance to those targets. And even when we have circumstances where we expect the target to be surpassed substantially, we have methodologies for remaining in the trade and when to close that do not give a level but are responsive to the price behavior that far outperform trailing stop losses, which means you only get out on a reversal substantially after it. And in blow-offs, you go super high and then you come down really hard. So these are the very suboptimal. If you, I used to warn people, getting out on a trailing stop loss is like using your handbrake on a car to stop at every stop street or red traffic light. I mean, it is truly, truly muppetry. It's absolute muppetry. You hear a guy lock up the wheels behind you when at a stop street. You look in your rear mirror and you go, what muppet is it that's driving behind me? Trailing stop losses are deeply ineffective, surrender a huge amount of profit, and you get negative slippage against you, because you're clearly selling when everyone else has also begun to sell. So it's kind of like hitting the cinema exit after somebody's shouted fire. We get up and we get out before the bell starts ringing, and we walk out and we're the only guy standing up in the cinema. Then somebody shouts fire. We're already in our cars and we've left the building, and then they stampede, and you're trying to get out in the stampede. You get suboptimal. You do not make near as much profit. You get negative slippage. If you have a target, you get positive slippage, because sometimes in the blow-off, you are selling into, you're the minority selling into a surge, and then they hit the stack. You get the first level that is actually fulfilled. You get upside gaps that give you further fulfillment. You could actually have 250 on the yen and get filled in an extreme circumstance. I'm not saying this is likely, but you could get filled at 263. It could be such an intense moment. There's just no liquidity. Boom. Everybody wants dollars. And then it turns around. It hits 300 and comes back down as fast and runs sub 100. And you're saying, man, those are insane numbers. I don't know what's waiting for you, but let me tell you, it'll shock you in terms of blow off. It'll shock you in terms of the way things will move. And the announcements will come thick and fast. On the 150 run on the yen, I did a premium update and I said, guys, I think we're going to run into 152. You could even approach 153, and then you're likely to get a substantial response. Why? Because it's a key level of significance. I remember saying to the guys, it's between 100 and 200 is one of the most key levels. The Japanese are going to hate the fact that that's run, and you're going to get some central bank intervention or some degree of pushback at that point. Sit it out, because we are long-term position traders. We're not trying to trade the IGN work. But if you had a small time setup and that was your only reason for the trade, we would have taken off on overperformance and we would have been coming back in now lower back down. But I'm not concerned at all about this, because Japan is going to keep monetizing. They are locking their debt at 0.25. They are selling pink pairs of crogs, and they've got 1 million of them in a storehouse for $1,000 a pair, and nobody even wants to pay $5. You're having no volume days on Japanese debt. Not one, not two, multiple in a week. But they want to assert that no, it's still worth this. It's still worth this. No one bought any, but it's still worth this. Because we're there and we'll buy. We'll buy with your money and we'll trash your money. We'll keep printing it and trashing it to sustain the illusion that the valuation of everything we've issued has that value, because it's our entire pension scheme. It's little old Japanese ladies that for 75% of the income that their husbands have handed over to them culturally have been buying the safe, secure, for their pension and retirement, low interest. Everything is risk, especially the things they tell you that are risk-free. That's the biggest lie, and the day comes when it's absolutely not risk-free. Nothing is permanent in this world. Government debt They own you contractually. And when they say, oh, who could have seen this? It's such a black swan. You're going to get the likes of green. Such a black swan. What? Such a black swan? That in an ever-expanding money proliferation scheme that's based on a debt system, that you keep expanding debts, borrowing money into existence, that there's eventually too much debt and you can't sustain the claimed values that you have been managing and engineering to hold up while suppressing precious metals to hold down, because it's the canary in the mine that says you're no longer doing Mises or you're no longer doing Hayek type sound money principles. Well, I'm here to tell you before, because by the time the car's crashed, it's just carnage and bodies. You can get off this train. You can get off this train before it smashes into the wall. You can be better off. You can see all the other financial carcasses and what is coming before it happens. I'm here to tell you that. And if you appreciate that, hit the like button and the share. Go to themarketsniper.com, get some targets in and start having exits. Think about your trip back home to neutral, to square, to that point of comfort where you've made a whole bundle and you're sitting within your pile of gold and silver bars. You're racked and stacked, you've backed, you're properly intact, you've got every single thing you need, you're energy independent, you're water independent, you've got a big piece of land, you've got 9 freezers in your flipping garage with organic game that you can eat and chew until the cows come home. You've got food, you've got relationships locally, you're fully reset ready, you don't rely on government for anything, you've got a very, very reset friendly tax structure, reset ready tax structure that you can use the weapons they set up for themselves against them. Foundations, we do it most affordably anywhere else. Slick, locally sourced, done it for me, done it for many of my community members. We did an event in Panama. We were full in the room with guys that came down. This was just on the tail end of COVID. In spite of that, everybody's structuring. People, you don't even have to travel to get this done. You can have an account in a non-common reporting standard area, bank account that will hold dollars for you even when you're not American. You can switch your pounds and your euros into dollars and sit there with money in that bank, and you can draw dollars. That'll allow you to draw dollars. You can go and start preparing for what I'm telling you is coming. The interest rates in America, the best of the current tightness so far, should be 9% or more. They need to be above the CPI rate. If they were at 9%, that TLT that I am short with plenty of puts will fall through the floor. And I can tell you, many things will die with it, including pensions, including everything that's been funded on debt, including deposits, including banking system. And you will see bail-ins. Remember, after Cyprus in 2014, bail-in law was introduced. Well, most of the Commonwealth nations, from Australia to Canada, have all written in bail-in clauses subsequently, including the American banking system. That means as depositors, you could be the support structure for these failing institutions. Thanks, Harshad. Very kind. Best advice is learning and getting connected with a sniper. Administration of government employees is getting too big and way too expensive. Listen, government is way too large of the economy. The whole principle of libertarianism was a small, efficient government system that was in fear of its citizenry. Nowadays, government is more than 50% of the economy, but they don't create anything. They just spend your money that you pay them in taxes to administer. And then they hire people. Gordon Brown's credit system, he spent 2/3 of the budget on credit, on administering it, and still sent the wrong amount of money to the people that were supposed to get it, that they could then not claim back. So he put a pool of money that he taxed and said, we will have a tax credit system. They administered it so terribly, they paid too much money to too many people, they couldn't get it back out of them, they wrote it all off, and the employment of the people and the scheme to pay it out took 2/3 of the budget. That's what happens when you give money to government. That's what happens when you give money to government. I'm seeing a proper corrupt government here. I was riding on roads that were once pristine. in our parts of the world. Now on farmland roads, we hit some of the most potholed tar roads that haven't had repairs in absolute ages. Where is all that money going? And you think, oh, but that's Africa. It's coming for you where you are in Europe. The lockdowns on an energy-related basis, the green lockdowns, the power offs, they're all coming for you in your. I'm in a first world nation. I live in a rah-rah-ree. Everyone wants to immigrate to my nation. It's coming for you in Germany. It's coming for you in the UK. It's coming for you in winter, in the winter of discontent that we warned about here. It's coming for you. You will learn. You will learn to have a diesel generator. You will learn to get government out of your life. Corruption and absolute power, loss of power, and all of this highlights how little government actually does for you for the massive amount that you pay them. That they do not even keep the lights on. They do not even keep businesses functioning when they're supposed to be kept functioning. That they do not even get you water. When your power goes down, half of you are going to have water outages, because the pump sending it up from XYZ to ABC ain't pumping, and all of this. You're going to have hit by more things than you realize when the power goes down. You're going to have to find battery chargers, battery torches in your rooms to stumble home if you've got cottages and various other things. You need to get prepped. You need to get prepped, and you need to get government out of your life. You need solar panels. You need to get government out of your life. You need your own independent water supply. You need to get government out of your life. You need to pay less tax because they are robbing you and stealing it. And they are setting up Ponzi schemes after Ponzi schemes perpetually. And they will clean the slate and start a new Ponzi scheme to play the same trick on a future generation while killing you off with unnecessary medicine, unnecessary poisons, and any other method, so that they can continue to perpetuate a supremacist doctrine that favors an insider class that are a legacy lineage at the expense that live like pests, big fat ticks sucking blood on your neck. That's where we are at. In this game, you are riding, my friends, down the finger of land where you are forced to fall off one of the edges, and it's coming. And this isn't doomsday porn, it's happening. You can't rein back inflation with 3.25% when it is running at 8.6%. You can't rein back inflation. All that happens is you are maintaining a negative interest rate gap that maintains selling pressure on your bond debt, which maintains huge pressure on your banking system, that have derivatives based on the debts, that have derivatives based on currency, and that have borrowed money into existence. That debt is devaluing. From our TLT call, if you grow your own food and your own electricity and water, you don't need a lot. You don't need so much income, and then you can live on reduced income. Preach, Francis. Save as many open-minded people as you can. Yes, I think that's it, guys. So we've spoken to you about two things. This was the tour epilogue. Thanks for joining me for the ride. I'll just show you the bike. Some folks have pulled up, so I won't try to keep them out of shot. But they're the bikes. They made it back in one piece. We had a great tour. It was really enjoyable. Freedom, low government, we could get cranky. We had two bikes that were dirt bikes that weren't even road legal. I love a country with less enforcement. If we were in Australia, they'd have spotter planes pulling us over for speeding. We just waved at the cops and said, hi, how are you? We had no problems. We're a little bit mischievous. We rode wherever we wanted to. It was just awesome. It was hot, damn hot. It was great fun. And I exercised my freedom of right to be around other fellow men enjoying themselves, having a wee drink in the evening, fumbling around in the sand, toppling over when we had to, and otherwise having a great old laugh, seeing old towns that were like from the 40s and the 60s that had corrugated iron roofs and red slash-stove porches, and way back then when I was a child, seeing that those places still exist out there. We went to a ghost town called Pitt-Sornavata. It was eerie, with an old hotel completely gone, floorboards fallen in, a railway station that when some of the guys were in the army, they went through that on the way to the border when we were fighting a war against communism, the same old Bolshevik revolution. And guess what, guys? You are fighting communism today. You are fighting the watermelon communism today, the green of outside and the red of inside, the same enemy, the same people, the same supremacist Bolshevik classes that want to murder the orthodox people of value. Truth is now a revolutionary act, and this channel may not survive such an event. But in the meantime, share, like, hit, go to themarketsniper.com. We are prepping for every element of these needs. There is real resetonomics coming. You can have your own personal foundation. You can get a lot more protection. You can have diversified banking options. You can have exposure to the dollar. You can have multiple places of existence where you can go to. You can have residency where you're entitled to remain in another place. You can put distance between the country you were born, the passport you hold. You need to think about your 5 flag strategy. This is all here. The bikes are good. Show the bikes. This is my mate's bike. You guys want to see the bikes? This is a 2020 1250 HP. HP is the high performance branding. Very nice. He rode it really well. Didn't tumble. He's got a lower screen. We both rode the whole thing with top boxes. I had a thermos flask with cold water. This one's my machine. This is a 2022. They were big and heavy in the sand, but they go great. I didn't do the gold rims. I stayed with a black, slightly had a black top box. All very good. The bikes did great. Bikes did great. It was a great tour. In fact, I'm thinking a community member that is now our onboarding. I want to introduce actually to you, while you guys are still watching, 456 of you, a community member. He's going to be as shocked to hear about this as I am, but I've threatened him. He's going to have to come on a bike tour. He does our onboarding. He's been doing onboarding, I think, for people to join. So here's an important point. I'm going to just mention something, a couple of things. To everybody, but this is an important point on style and who we are. Divolt's a lovely guy, very good-natured, very principled, very honest and straight, very unsalesy. He's a community member. He's not a professional salesman, and he does onboarding. He explains and demonstrates. And when you book a call, he's the guy you speak to, one of two. The other one is awesome as well, and I'll introduce and talk more of him later. And we're probably looking for a few more. We've been busy. We're doing great. You know, because our business is truth in a time of absolute deception. It's kind of counter-cyclical. Anyway, yeah, Versus 650 is a nice bike. Anyway, so I'm going to put him, he was on a GS. I'm going to put him on, I think he's been with us for a long time, probably at my expense. I'm going to put him on the next tour. I've told him he has to get on the pegs and start riding. He's going to come hang out with the men and do a tour. And the year after that, I'm going to grab Michael, our other guy, who's working. He doesn't know this yet. He'll be watching this YouTube and going, what? I'll probably grab him by the scruff of the neck and stick him on a bike, and he'll come on the follow-up tour on my cost, because I like good, reliable, honest people, and that's what they are. And when they've been with me for a while, I'm only happy to have them go for great experiences. Anyway, so we had a guy who wrote an email. If you're one of these guys, don't even book a call. Please don't. He wrote, because we have a system, just like everybody, we're a business. Somebody's going to be on a call with you. You booked a time slot. So we have an email that goes out and says, hey, this is just a reminder that you've got a call with XYZ at such a time, just to let you know, and here's the link and everything to go. And he wrote on this email, I hate this marketing ballsy bull stuff. I'm not going to come to any call. You just send me the information and I'll decide if I join. And the answer just goes straight back. No, you're not joining. We don't want you in our community. If you've got this nauseous, skeptical, it's ironic he had an email that was all about marketing in it. So I suppose he judges everybody else by the clickbait or whatever his business is. We're not like that. You do speak to a person. There's a reason why you speak to a person. You speak to a person just to show that you're actually also a decent character yourself. You have some level of courtesy. I'm not going to have a guy who talks like that to one of my guys who's not a salesman but is a community member and was really arrogant and smarmy. I'm not going to have him coming and being arrogant and smarmy in my community. Mate, I don't need your money. I promise you, I absolutely don't need your money. This is not the community for you. If everyone is a spam email moron to you because they just send you a reminder for your call. You've got the wrong place. We respect each other. We talk nicely to each other. We've got highly qualified, very interesting, decent people in there. I don't need a rodent. I don't need a spam market here and there who talks to people like shit because he thinks he's going to be paying some money and he's going to be owed a favor. I properly don't need your money. I want decent, honest, genuine, salt of the earth people like the farmers we met on the way that help and give help and are courteous and say hello and thank you, madam. I'm old values world guy. I don't need anybody who's in this New York City mindsets. Just because you're even making a proposition to me, I get to puke on your head. We don't need you. We don't want you. We want good quality, solid people who are respectful. And you'll be given an opportunity, and we promise to be the same back to you. And you get a 14-day guaranteed, no quibble. I don't even ask. It's absolute guaranteed. If you're not what you think it is, you get to back out. That should be all you know. And there's many people we've refunded. We turn down about in double digits every year. And I'm not talking like 10 people. They just look skittish. They have too high an expectation. They're rude. Anybody who's rude to my staff, and when I say staff, my community, he was a client and a community member first who's elected to play that role. He does get paid and remunerated for it, but I don't tolerate it. We are a courtesy-orientated environment. We're old school values. You want to be a bullshit commie who thinks he can crap on everybody. This is not your place. We are not your people. We are there for willing, decent people who want to learn, want to grow, and take their trading forward. So sorry for that tiny bit of a rant. Most of you are not in that category. But if there are a few of you of, hey, you're going to be asking me for money, I get to be a punk, then don't, because we just don't want it. And we won't upset the dynamics of who we have. Anyway, I've made a total bollocks up of buying these things. I buy gadgets that I just can't use and I chuck half of them away. Someone will have to explain this tool to me because it just don't work. I've gone back to holding the phone in my hand. So what did we learn today? And I'm closing. You learned that you can't contain inflation. That's at 8% plus with interest rates at 3%. It only gets bigger, it only gets higher. As long as there's that negative rate differential, debt only goes down. That means interest rates will actually be forced up on the debt and they will lose an immense amount of money. You learned that the country that is tightening harder and faster gets the currency benefit, particularly if it's the global world currency as the dollar is. And you also learned that all the others get beaten up for moving slower. And not having the world currency. But you also were made to think of that future when you get a melt up, that if you don't get targets, you ain't getting the prize. If you don't have the order already in the system, it could happen in the middle of the night on a Japanese session, or if you're born in Europe or you're in the East, it could happen late on a Friday in the US session. If you don't have the targets, you don't get to get out, you don't get to come home. These bikes came home, but it was a trial. It was, 160 Ks here, there, wet weather, hot weather, tire pressure going down. We had a couple of punctures and we thought we'd fix them and the pressure was going down. You've got to plan how you get home. You've got to get back to square. You've got to plan to get neutral. Okay, so think about all these things, a couple of fundamental principles. Go to themarketsniper.com to book a call. If you are like-minded, you want to be surrounded by decent, respectful people that will show you respect and for whom we expect you to be respectful towards, then we might be the community for you. And you can also get your reset-onomics, where you too can start to get the financial benefits of being a sovereign citizen that will save you from the debt collapse in your local currency, in your local country, where all your flags sit in one place. Do not make it easy for them to punish you. Go where you treat it best. Money knows that, and that's why it will flow out of the pound and the euro into the dollar. That's why it's flying out of the yen into the dollar. And long run, that's why gold will dominate them all. That's why silver will dominate them all. Until next time, thank you very much for watching, and I enjoyed having you guys on board. Have a great Sunday, and we'll see how the Sunday session goes. Bye for now.